Hello traders, you're welcome to this video, and I especially welcome you back to the Forex Geek channel. In this channel, we break down top Forex and stock market strategies for active traders like you, okay? So in this particular video, we are going to be diving deep into one of the most effective high-speed approaches, all right, for trading the Dow Jones, okay? So as you can see, I am on the Dow Jones chart, that is the USA 30, and we're going to be discussing a scalping strategy for trading these stock indices, all right? If you're someone who loves to trade fast and make quick moves, then this strategy is for you. By the end of this video, you'll have a full understanding of how to use this strategy to maximize your trading opportunities with the Dow Jones, all right? Let us jump right in. So first things first, let's quickly define scalping, okay? Let's quickly define scalping. Now, scalping is a trading technique where you take advantage of small price movements within a short time frame, all right? Within a short time frame. Now, the idea of scalping is to make multiple trades throughout the day, capturing quick profits by entering and exiting positions swiftly. All right. So unlike long-term strategies that rely on holding positions for hours or days, scalping requires fast decision making and precision. Now, in the case of the Dow Jones, scalping strategy, you are targeting the Dow Jones Industrial Average, okay, which includes 30 major US companies. That is the reason why it's called the USA 30, right? Now, since the Dow is volatile and makes relatively quickly moves, right? It moves relatively quickly. It is ideal for scalpers who are looking to make small gains from price fluctuations. Now, timing is key when it comes to scalping, all right? Timing is key. So, especially with the Dow Jones scalping strategy, right? So you need to know when the market is active, okay? It's important. You need to know when the market is active and when it is quiet, right? So in terms of market hours, scalping is most effective during market hours when there is high volume and volatility. Now, the first 2 hours after the New York Stock Exchange opens is typically the most volatile time for the Dow, all right? And then you need to be aware of key economic data. Pay attention to major economic releases like the non-farm payrolls, CPI, or GDP reports. Now, this tends to create quick price movements, okay? And finally, you need to pay attention to market sentiment. Scalping works best when you understand the market's mood, okay? Is the market bullish, bearish, or sideways? Your scalping approach will differ depending on this, all right? So watch the economic calendar and be ready during these active market hours for the best scalping setups, okay? Now, as a scalper, obviously, you should be making use of shorter time frames, like the 1 minute, the 5 minutes, and the 15 minutes, okay? Let us talk about, let us just talk a little bit more about, the volatility of Dow, all right, the Dow Jones, right? While it is volatile, you can see, the Dow Jones can move really fast, right? You can see just within the space of a couple of days or even hours, you will notice that the Dow Jones can have several recurring price spikes. Okay, you can see something like this, you can see something like this, you can see something like this, and this is the 5 minute time frame. As you can see here, you can see another spike, you can see another spike, you can see another spike, another spike. So as a scalper, you're going to enjoy scalping on the Dow Jones, so long as you know what you are doing. All right. Now, it's important to avoid, trading during times of extreme uncertainty. Okay, so that you do not end up losing a lot of money. All right, or during low liquidity. Okay, because these conditions can result in unpredictable price action. Now, let us talk about entry and exit points. Right, in scalping, you don't have time to wait for the perfect setup. Okay, you need to act fast. So having reliable indicators to guide you is crucial. So let's go through a few that can help you with the Dow Jones scalping strategy. Number one, moving averages are quite a great indicator. They're very popular indicators, right? Now, they are a great tool for identifying trends and potential reversal points. As a scalper, you may want to pay attention to short-term moving averages, right? So let's just use the 21 period, for example. The 21 period can help you to spot quick entry points. When the price crosses below the 21 EMA, for example, it's a sell signal. When the price crosses above, it is a buy signal. All right, so that is your cue to enter a buy. When you notice the price climbs above the moving average, so you can quickly enter a buy, and then just be monitoring. When the price drops below the moving average, then you can exit your buy trade. And then in the case of a sell, when the price drops below the moving average, you can just quickly enter, and then you monitor it. When it climbs back above the moving average, then you exit your sell. Okay, that's quite a quick entry and quick exit. Now, let's talk about the RSI as well, the relative strength index. All right, the relative strength index, it's another indicator that I like to use. Okay, when the RSI hits overbought or oversold levels, that is over 70 or under 30, right? Over 70 is for the overbought, under 30 is for the oversold, right? It signals that a reversal could be near. Okay, so I want to combine that with price action, and you will know when to get in and when to get out. Okay, now do not forget to use support and resistance levels. Okay, they're very important, right? They're very important. Support resistance levels are areas of rejections, preventing price to go further upward. That's for resistance, and support levels are area of rejections, preventing price from going further downwards. Okay, these are psychological price levels where the market has reversed or stalled in the past. So they can serve as great entry or exit points when you are scalping the Dow Jones. For instance, if the price is approaching resistance, right? If the price is approaching resistance and the RSI shows, overbought conditions. So for example, let's use this. As you can see, the price was approaching resistance and RSI was showing an overbought condition. You might consider exiting your buy or taking a short position. You can see shortly afterwards, we actually had a sell, right? Shortly afterwards, you can see that the price dropped down, right? Now, scalping, like any other strategy, comes with risk, but don't worry, we can minimize that risk with a few simple steps. The first is your position sizing, right? It's important to use small position sizes when scalping. Now, the goal is not to make huge profits per trade, but to capture small gains across many trades. Okay, and then secondly, stop loss orders. Always have tight stop loss in place. In scalping, a small price movement against you can wipe out your gains. So make sure you protect your capital. All right. A good rule of thumb is to set a stop loss of 5 to 10 pips. Right. So when you enter a sell, for example, 5 to 10 pips above your entry points should be where you set your stop loss. If you enter a buy, 5 to 10 pips below your entry point should be where you set your stop loss. Okay, and then in terms of take profit, you don't need to wait for massive moves, right? You can set small take profit targets of 5 to 15 pips depending on volatility. All right, you are aiming for quick, frequent wins. Do not forget that. Okay, now do not get greedy. All right, do not try to get greedy. Don't let greed take over. If the market moves in your favor, lock in profits quickly and move your stop loss to break even or a few pips in profit. Okay, this way you are reducing risk while securing small wins throughout the day. All right, scalping can be quite intense, especially when you're making multiple trades in a short period of time, right? It requires focus, discipline, and the ability to stay calm under pressure. Now, there will be times when trades do not go your way, okay? It's part of the game, right? The key to successful scalping is to stick to your plan, follow your indicators, and don't let emotions drive your decisions, all right? So if you're ready to implement the Dow Jones Scalping Strategy in your trading, now is the time to practice and master it. Okay, you can practice on a demo account first. Then once you have recorded consistent profits, you can then go ahead to trade on your live account. Okay, it's important to practice first, all right, to build confidence. Okay, it's very important. Just remember, it's all about precision, quick decision making, and effective risk management. Okay, if you found this video helpful, make sure to give it a thumbs up and subscribe to the channel for more trading strategies, tips, and analysis. Turn on the notification bell so you never miss a video. All right, I'll see you in the next one. Until then, happy scalping.